Hello and welcome. You're watching Business Today Television. I'm Sakshi, Batra, and in this special video, we're going to be talking all about the FIIs sell-off. If you too have been looking at the selling spree that's on, well, you should be looking at what are the key reasons FIIs have been selling. Is it just about the China factor, or is it more to it? And what is that? What is it that top market experts are saying about this huge selling spree that we are seeing? In fact, FIIs have broken all records when it comes to selling in the month of October. Foreign institutional investors have sold nearly $10 billion in shares in the secondary markets so far in October. And according to the data from National Securities Depository Limited, FIIs were net sellers in the secondary market for 12 consecutive sessions, offloading approximately $9.9 billion up until October of 17th. And October has seen FIIs registering highest ever monthly outflow with the previous record for highest ever sell-off that was seen by FIIs was during the COVID time. In March of 2020, we had seen the FIIs selling reach to a peak of $8.3 billion in a particular month. So far in October, we still have many days left and many sessions still left. We have already crossed nearly $10 billion of sell-off from the FIIs, and this is the highest ever sell-off by FIIs in Indian secondary markets. So what are the key reasons behind FIIs dumping Indian stocks? Well, of course, one, as we all have been talking about, sell India, buy China. That trend has emerged among FIIs amidst a rally in the Chinese stocks, as Chinese markets currently appear more attractive in terms of the medium to short-term valuations. But there is more to it. Indian markets are trading at elevated levels with historically high valuations, and that's another key reason. They also seem overtly optimistic given the current economic background of slowing growth, persistent inflation, high taxes, elevated interest rates. And this is what most of the experts are penciling in. They also believe that coupled with these challenging macroeconomic conditions, the recent earnings reports across various sectors that we have seen have been rather on the disappointing side. Next, there's another key reason. The recent US economic data that's now indicating a robust economy while suggesting a no landing scenario. Remember, we were talking about recession a few months ago in the US markets, a recession with a hard landing or a soft landing. Now there is a scenario that's emerging of no landing. Probably there won't be any recession looking at the recent data points that are coming in from the US. And that has now driven a sustained rally in the US dollar over the past 3 weeks, leading to a rising US yield, which typically also has a negative impact on emerging markets in terms of capital flows. Markets like India are on the back foot because of that. But it's not actually all that FIIs are completely exiting the Indian markets. FIIs have actually continued to invest in the primary markets. FIIs have been net buyers of IPOs. They have accumulated about $645 million in October to date that we have seen in the primary markets, especially IPOs like Garud Construction and Engineering, and also Hyundai Motor India, with a combined value of exceeding 28,000 crores. Of course, a large part of it is around 27,000 odd crore rupees has to do with Hyundai here. And this is the kind of inflow that the IPO space or the primary market has seen from FIIs. So a sell-off and a sharp sell-off at that in the secondary markets, but some buying emerging in the IPO space. Additionally, 5 SME IPOs worth about 267 crores were also launched in October. That's also where FIIs have been investors too. Finally, foreign investors have invested about 1.5 lakh crore rupees so far in the calendar year 2024 and now have withdrawn nearly 94,000 odd crore rupees from the Indian markets thus far. And thus, despite the sell-off, foreign investors still are net buyers from the year-to-date basis, with about the purchases of around 50,000 crore rupees on the positive side still remaining as their investments in the Indian equity space particularly. Well, with that, we'll wrap up this special video, but I hope this has given you enough and more clarity about what is the FII stance when it comes to the Indian secondary market. the key reasons behind their sharp sell-off, and of course, what are top market experts expecting in terms of what could be going forward from here. With that, we wrap up, but do stay tuned. There's a lot more lined up for you on Business Today Television.
The first one is the curious case, as you call it, of India's K-shaped consumption pattern. Now, this was something that was debated outside of